think it's just an example of the pent-up interest in crypto. And we are hearing from clients around the world about the need for crypto. I mean, when you think about, I think some of this rally is way beyond the rumor. I think the rally today is about a flight to quality with all the issues around the Israeli war now.
Hey everybody, thank you so much for checking the channel out today. My name is Agabus. This is your financial education channel, and today we're going to chat a bit about some of Blackrock's most recent comments regarding bonds and a potential flight to safety with Bitcoin. And today we're at Yahoo Finance, where Blackrock warns the worst U.S. bond rout in history is far from over. The U.S. bond market is braving the biggest sell-off in history, with benchmark yields quintupling since the end of 2020. The rout is far from finished, according to Blackrock. Inflation, the Fed's higher for longer interest rate policy, and the U.S. debt burden are weighing in on the market. The U.S. bond market is in the throes of an unprecedented three-year rout, and the sell-off has room to run further, according to the world's biggest asset manager. If bonds are down this year, that'll mark 3 years in a row where the bond market is in negative territory. Benchmark 10-year yields have already more than quintupled since the end of 2020 as the market reeled from the impact of decades-high inflation and a steep surge in interest rates and fears of a sovereign debt crisis. I have flirted a bit with that issue coming here. We'll take a deeper dive down the road at some time, but stay tuned for that one. The rise in yields accelerated in recent weeks, spooking traders across asset classes as the Federal Reserve last month signaled rates will remain higher for longer as inflation risks linger. The central bank has boosted key rates by more than 500 basis points. 500 basis points would be 5.00. Since early 2022, the steepest since the 80s. The fourth quarter update to its investment outlook, Blackrock has said it will avoid investing in long-term U.S. bonds as it expects yields to continue to climb. Yields rise when bond prices fall. And again, the thought here, if they're not going to be investing in long-term bonds, going back to the relationship with interest rates, as interest rates continue to go up, the value of bonds goes down, just like a seesaw or a teeter-totter. Blackrock says we will steer clear of long-term U.S. bonds even after their surge. Why? We think term premium, the compensation investors are demanding for the risk of holding long-term bonds, is going to rise further, pushing yields higher as markets price in persistent inflation, higher for longer rates, and higher debt loads. This is according to Philip Hildebrand. I mentioned this the other day, but the iShares 20-year U.S. Treasury ETF is down 46% in the last 3 years. During the same time, 10-year U.S. Treasury yields have jumped to 4.72% from 0.92%. The ongoing Treasury rout ranks as the deepest bond bear market in 247-year history of the United States, according to Bank of America. A surge in the supply of bonds is also weighing on prices as U.S. government debt climbs past an unprecedented $33 trillion last month, doubling in the last decade. The United States is spending way more than it taxes, and this will continue. As billionaire Ray Dalio has cautioned the U.S., we are the start of a classic late big cycle debt crisis characterized by a shortage of buyers for these bills and bonds, meaning other people aren't going to finance the government's debt at these rates or any longer. Continuing on from Blackrock, we're now over at the Daily Hodl. Blackrock CEO Larry Fink says Bitcoin and crypto will play a role in investors' flight to quality. Blackrock chief executive Larry Fink believes that Bitcoin and the rest of the crypto market are now ready to serve as a safe haven asset amid worsening geopolitical conditions. A couple of years ago, people were saying that the end of Bitcoin is here and that Bitcoin is too speculative and too risky. Pretty big change here. In a recent Fox News interview, Fink says that Bitcoin's rally earlier this week is an indication that investors are seeing Bitcoin as a mature asset that can serve as a store of value in times of crisis. Larry Fink was referring to the rally over the weekend where there was a false report on Twitter, also known as X, that a Blackrock ETF was approved. Over the weekend, it jumped 10% just on this fake tweet alone. Larry Fink says in the interview, "We think it's an example of pent-up demand for crypto, and we're hearing from clients all around the world the need for crypto, especially with all that is going on in the world these days," he says. He believes, quote, "Crypto will play that type of role as a flight to quality." At the time of this writing, Bitcoin was trading at 28,448. And looking at the broader picture, Fink says that people's attention is being consumed by bad news stories around the globe that are forgetting about the world-changing potential of artificial intelligence and technology. Some technologists are saying that artificial intelligence, technology, and blockchain is all going to be coming together here in the next couple of years. That will be interesting. I think some are calling that Web 3. But that's all I got for you today. Thank you so much for checking in on the channel again. Interesting news coming from Larry Fink about Bitcoin as a flight to quality. Crazy. What do you think about that statement? Drop a comment in the comment section below. I'd love to hear from you. As always, thank you so much for tuning in today. Make sure to stay inquisitive, stay informed, and stay subscribed for more. Thank you so much, and we'll see you tomorrow.